Hey, good afternoon. Today is June 8th, 2022. We're looking at a 2000 tick chart for the E-mini S&P 500 futures market. We've got a 21 EMA here in blue, 9 EMA here in cyan, 200 EMA here in magenta, and a MACD indicator down here at the bottom. But we use technical analysis, price action, and overall market context in order to place our trades. Take a second real quick, like the video, subscribe to the channel, turn on post notifications so you know exactly when I post this content. And let's get right into it for today. Now, I did not trade today. Unfortunately, the past few days have been very busy. Something came up yesterday. I was able to trade for a little bit in the morning. I tried making a video, wasn't able to push it out. I might end up pushing that out tomorrow, but what I want is for today to be a just standard bar by bar analysis. I have not looked at the chart at all. I have no idea what happens. My chart's completely clean here. So what we're going to do is mark a level of resistance up here at the overnight highs and a level of support down here at the overnight lows. And we recognize, okay, we're definitely in a range. You have three exponential moving averages that are essentially flat, with prices oscillating up and down. So we could be dealing with a range day today, and it's something to keep in mind. And now what I should do is actually activate my highlighted cursor there so that it makes it easier to go bar by bar here. So the market opens, we have a new swing down here as prices come up for a first entry short. Prices continue to come up, looking for a second entry short to trigger, and it does. Not a good signal bar to go short on. EMA is additionally flat. So that second entry short works, makes it down to the bottom of the range, but not looking to trade any of that. We do have a little bit of separation between 9 and 21 EMA here with the new high. Prices come down for a first entry long, second entry long, looking for that to trigger. One triggers, it's potentially a failed breakout here. MACD is also losing a bit of momentum, so I'm not going to look at going short below this bar. We have a new low. Prices come up for a first entry short, second entry short, that fails. We don't get a close above the EMA, so I'm not looking to take a failure to go back long to the top of the range. But if we had a nice signal bar that closed just above the 21 EMA, I potentially would have looked at going long there and riding the momentum, at least for a scalp. Now, unfortunately, the past few days, we've been seeing a lot of this consolidation, these overlapping bars, and that makes it a little bit difficult to trade as we're trying to figure out where the direction of the market is headed. There are moments like this where we have this plateau, prices come down up for a first entry long, prices pull back up for a second entry long, but it's hard to read that. EMA is flat, and while it does work up for a scalp, it's just hard to read in the moment. You have to be very careful. Same thing happens here. We have a new high, prices come down for a first entry long, prices pull back and immediately close above EMA. Nice bullish bar, but again, EMA is flat. Hard to trade this. Now you could potentially be in that trade and then prices chop around and potentially stop you out. But if you put your stop loss one tick below the signal bar that you entered on, maybe you're okay. You would be okay for a scalp, but it's just not a trade that you'd want to take. Now hindsight, it's a little bit 2020 now, but as prices continue to chop up, we do have a new low here as prices come up for a first entry short. Prices come up and down for a second entry short, rejected right off EMA. If this bar had finished bullish, that would have been a great place to go long. A failed second entry short right off 21 EMA, bullish in balance, plenty of room up to the highs. So you could potentially enter on this bar here, but again, not a good signal bar, and hindsight really is 2020 here. But where do we anticipate prices to go? Up to the top of this trading range that we marked earlier. So that's really no surprise. Prices push exactly where we want them to go. Now what I'm doing right now is I'm reading all price action. I should be drawing in some trend lines. I should be drawing in some channels, but what I tend to find is that we draw these ranges and then they just extend a little bit. So, maybe we have some short-term trends. I know we had a short-term trend moving down right here. When dealing in a trading range, the short-term trends really matter. So that's what you got to try and focus on drawing. The short-term trend is working up. We have a potential break looking for a new high, but prices continue to chop around a little bit. You do get a second entry long here, but we don't use this 9 EMA as a key entry point for those types of trades. I only use the 9 EMA for catching stops. So as price action has it, we do get a break and a new high right off the level of resistance here. So this uptrend has played out. I'd be looking to go short. Additionally, you look down here at the MACD. MACD is now losing all of that bullish momentum, waiting for that MACD to cross over to just confirm our bias. And look exactly what happens. MACD starts to cross over. Prices are coming back down. Where are they going to test? Prices are coming back down to test the 21 EMA. So we'll see how prices react here at the 21 EMA. But you also have to be very cognizant of the fact that prices are now oscillating up and down up here at this level of resistance. Now this could be a great trade opportunity here. We have a new high as prices come down for a first entry long. Now prices are pushing down below the EMA. If we can get a nice failed second entry long opportunity, we could look at going short. Now notice what happens here. second entry long triggers below EMA, but we're not necessarily at the key entry point, which is this 21 EMA. So if we don't want to miss out on this move, we could look at catching stops here. We can see this 9 EMA and 21 EMA about to cross over. MACD showing bearish momentum, plenty of room back to the opposite end of this trading range here. We've been reading price action correctly. The only hesitation I'd have is we'd be going short into this 200 EMA, but we can see throughout the whole day that 200 EMA has practically remained in the middle of this trading range, so I give it a little bit less weight. I'd put my market order one tick below the signal bar, but as prices continue to chop down, I'd remove my order. Prices do come up to this 21 EMA. We have this new low. Prices come up for a first entry short, second entry short. You could argue we have a bit of a short-term trend here with a break, new high off 21 EMA. You do get a nice signal bar with the close below the EMA. Based on how you see this and how you've been reading price action with a short-term trend working out with a break new high, looking for prices to push back down to the opposite end of this trading range, you could potentially enter there. Now, unfortunately, prices get you into that trade reverse and you would have been stopped out. So that would have been an unfortunate loss. I feel like I've been reading the market correctly. I think what would have been nice is if we saw clear rejection from the EMA, prices continue to push down. That would have confirmed our bias that we were going short. Prices are pushing below the EMA here, but then they come back up to test the EMA. Realistically, this is a place where we're testing the EMA for the first time after prices push back down. So I think that's what makes it aggressive. And obviously, when I look back at it, hindsight's 2020. And with that in mind, maybe you don't take that trade, but I'm just being honest, that's a trade that I probably would have taken. Now you start to see the EMA, 9 EMA continue to flatten out. You can also find it's fairly difficult trying to draw, short-term trends because they kind of chop down, they kind of chop up. Very hard to trade this stuff. Prices continue to fall. There's no way to enter this, no way to catch stops here, but prices make it nearly to the opposite end of this trading range that, again, we marked earlier in the morning. These are just overnight lows. But what do we have here? Again, harder to draw, but we have some sort of short-term trend that's moving down, overshoot down. You could draw it like that. You could even just focus on this last bit here. You have this short-term trend that's working down in some capacity. We have a break of this short-term trend, move to nearly a new low, forming almost a double bottom. So this downtrend has essentially played out. It's found a level of support down here at the bottom of this range. So we anticipate prices are going to push up. We want to see how prices are going to react to the 21 EMA. MACD is beginning to cross over. We could continue to see prices push back to the opposite end of this trading range. Now we do have a new low here as prices come up for our first entry short. Prices continue to come up. Potential second entry short to trigger. There's a second entry short trigger and prices reverse. Now, based on the analysis I'm doing so far, I look at catching stops here. You have people that are trying to go short below this bar, and all those people that are going short, where are they putting their stop losses? One tick above the signal bar right here. So if I'm going to enter this, I'm going to enter one tick above this signal bar. You can see that this downtrend has played out. We had the crossover of MACD. We're pushing into bullish momentum. 9 EMAs crossing over 21 EMA. 200 EMA isn't as important right now. I'm entering one tick above this signal bar. Now it looks like prices get me into that trade by one tick, and then they would have reversed. My stop loss would have gone one tick below the signal bar, so I probably would have lost that trade. But based on how I'm reading the market, that's a trade I would have taken and most likely would have lost. And again, you can kind of see what happens. You start getting all these overlapping bars, all this congestion. It's just impossible to trade this. But I'm reading the market as I normally would, and so I would have been 0 and 2 on those two trades. Now this is where another one gets tricky, right? We have this new high, prices come down for a first entry long, then prices come back down to the EMA. Second entry long, nice bullish bar, close above the 21 EMA. The only thing I'd be hesitant about is MACD is showing a bit of a crossover into potentially bearish momentum. But this is the thing to remember about the MACD. I've been using the MACD primarily for the catching stop strategy. If I'm looking for a standard second entry long, failed second entry short, I don't pay as much attention to the MACD. But again, I'm also trying to figure out how I want to integrate it into my trading as a whole. For those that don't use the MACD, this looks like a fairly solid setup. And why? Because we had prices chop around in a little bit of a trading range here. Prices are congesting. Prices trade to the low side, failed breakout. After this whole downtrend has played out, we're looking for prices to reach back to the top of this trading range. This could be a solid trade to take, and I hope it freaking works out. And it does. Okay, so enter the trade. You would have been out for a scalp and potential runner. So depending on how you played this, you might have had a little bit of a runner as prices chop up. Unfortunately, it doesn't shoot up the way we want it to, but that is a trade that you could potentially take. And you see prices are holding here at the 21 EMA. We do get this new high as prices come down. First entry long, second entry long. Not the best signal bar. I guess you could see it as a higher low compared to this one. So this could be an aggressive one that you do take if you see this in the moment. Additionally, you had a second entry short that triggered here somehow. The count was reset probably here. Prices came up, down for a first entry short. Price came up, down for a second entry short. So you got a failed second entry short. You got a second entry long. That's actually a pretty nice move here. But anyway, you enter this trade here and you potentially would have been in and out for a scalp before prices push back down. Again, you can see prices are chopping along here. You kind of extend this trading range, prices holding in the midline of this trading range, and you see prices find the support down here at this bottom before they come back up. Again, just chopping up and down. Very hard to trade anything. Now you got conflicting beliefs. You got 21 EMA that's flat. You got a new high, price come down up for a first entry long, second entry long. If there's a trigger above this bar, you also have this new low, price come up down for a first entry short, potentially second entry short if it triggers below this bar. You really can't trade this because what happens is you get sucked into this trade, prices come back down, stop you out. That's no surprise right there. You see this great bullish bar, you think, okay, we're going to ride prices back up. You get into this trade, immediately reverses, gets you stopped out. EMA is so flat, bars are overlapping, absolute pain to trade. Look at that. Now you see as prices continue to push on, we do get a separation between the 21.9 EMA, but anytime that prices seem to be trading in this range, they're just chopping down, they're chopping up. And the thing that makes it even harder is if you're taking these trades over here, you just lost your 0 for 2 here, maybe 1 to 2, maybe 2 to 2. I mean, you'd technically still be red for the day. And that does a lot on the psyche. So these days are really hard to trade. As prices chop down, you see these stems to the low side, these stems to the high side. I'm very hesitant to trade any of this. And as prices continue to push down, we could just see a failed breakout. Prices could continue to push back up into this trading range, but they don't. It looks like prices are holding at 21 EMA, and no, they actually do. They push back up into this trading range. And you can see resetting the count down here at the bottom, prices come up for a first entry short, then prices push above the EMA, looking for a potential second entry short. Second entry short triggers, separation between the 9 and 21 EMA. You got the MACD showing bullish momentum, a little bit of room back up here to the highs. I'd look at entering a catching stops trade here. We had a second entry short that triggered. My entry order would be one tick above this signal bar here, and the stop loss will go one tick below. So my entry order one tick above. As prices come up, I would be in this trade and I'd be up for the scalp. You see prices continue to reach the top of this level of resistance. They break through, now testing the overnight highs. So again, according to my rules, I would have taken that trade. I would have made that scalp. And again, I'm forgetting to draw these short-term trends. I'm really just reading the price action, but you can see potential short-term trend that's working down with a break, move to a new low. Downtrend is played out. Failed breakout of this range, pushing back up into this trading range. Could we have a wider uptrend here? No, I don't like drawing the wide uptrends in trading ranges. We really got to focus on the short-term trends. We want to find those short-term trends that are holding as tightly as they can. And even this might be a little bit wide. Realistically, it's probably, I'd argue, could even be something like that. Short-term trends working up, break, move to a new high. So now this uptrend is played out, and now we're going to see prices come back into this trading range. And that's kind of what we see here. New high, first entry long, price come down, second entry long that triggers. So a failed second entry long, but we're above this 21 EMA. And that makes taking a short here below this bar very aggressive. I actually got to change the color, but we do have MACD that's losing that bullish momentum, coming back from the top of this trading range, not only here but here as well. But it makes it very aggressive because prices could easily hold at 21 EMA and continue up. You don't have a lot of room to get out, so I wouldn't be taking that trade. But you also never enter it. As prices continue to push up, you would have removed your order. But you can kind of see what happens even on this bar. We get a higher low on this bar. Would you be interested in taking a trade here? Could you take a higher low opportunity here? Maybe. Not the best looking signal bar, but it is a higher low after the second entry long played itself. Prices holding above this 21 EMA. Maybe you take it, but maybe you get out for a scalp. 450 up to 7. So you definitely would have been out for 2 points, but it's just hard to trade that. And even by this time, you start seeing prices are ranging again, making nearly a double top. 9 EMAs flattening out in the middle of this range. Congestion, consolidation as 21 EMA catches up, and you see, I guess that's what we continue to get. And that brings us to 10:48 Central Time. So yeah, I mean, I didn't trade today, but if I did, I I probably would have been red for the day. You can see the potential trades that I marked. At this time, ATR is just below 3. You can see how slow price action is going. It really is a pain to trade this stuff. So don't feel too discouraged. If you found today and the last few days to be difficult, know that you're not the only one. Trading at this time of year can be very difficult. So, if you've been paper trading, continue to paper trade, continue learning to read the market, continue to watch content and immerse yourself in something you're passionate about. But don't be too hard on yourself. This kind of trading is difficult for everyone. So, I have a short video from yesterday. I might upload that tomorrow instead of making a video. Again, this week is wedding week. I'm going to be the best man at my best friend's wedding. So, I've got some things that I have to finish up. But as always, I do appreciate your continuous and constant support. Continue to work hard, strive for excellence in all you do, and I'll see you next time.